Hello everyone, you are at Binary Trending channel. Today I'm going to grow a $100 account to reach a much higher amount. If you are new to this channel, subscribe and turn on the notifications so you don't miss our new strategies and trading tutorials. Give this video a thumbs up and let's start. Go to charts and change to candlesticks. Set the candle time frame to 1 minute. Now adjust the chart on the screen to 1 hour. Now you can see that the candles are not too big or too small. That is how to adjust the chart to see how the market have been moving for 1 hour. Go to indicators and select the following indicators: Keltner channel, moving average and stochastic oscillator indicators. Edit the Keltner channel indicator multiplier from 1 to 2 and save. Change the moving average indicator period to 100. The moving average type should be exponential moving average, EMA, and save. Now let's adjust the indicator thickness so it can be more visible. Let's set the trade expiry time to 2 minutes and we are all set for trading. Now let's place a $100 trade at this entry point. It's a call option trade. To enter call option trade like the one on the screen now, the following necessary conditions should be true. The stochastic oscillator should be from oversold condition growing upward. The blue line of the stochastic oscillator should be that it have crossed the yellow line as it is growing up. The red candles should be below the lower line of the Keltner channel indicator and the trend have start to reverse or it should be reversing already. The lower Keltner channel line should be moving upward. When it is moving upward, it's good because you can now know that the market would not continue falling below the lower line of the Keltner channel indicator. For the exponential moving average indicator, it gives us the general movement of the market. The moving average at this particular moment is moving upward and it's a good time to place call trades. That is just the conditions for one entry point. You need to watch this video till the end to see the different entry points for the different types of trades. Few seconds to the end of the first trade and it's absolute profit. Here is another call option trade entry point. This entry point is different from the first entry point. The market was continuously falling below the lower Keltner channel line, but at this particular moment it started growing upward. The stochastic oscillator have leaped from oversold and the blue line have crossed the yellow line growing upward, which are the conditions necessary for call trade. But look at the moving average indicator, it's falling, and the Keltner channel upper and lower lines are both opening outward. It's an entry point, but to place trades there you need to be careful. When the moving average is going downward, it's giving you a general overview of the strength at which the market is falling at. The exponential moving average indicator, at this point in the market is falling but the strength is weak, that's why the call option trade is going quite well. Using only the Keltner channel and the stochastic oscillator indicators, you get the entry points, but to identify the good entry points for profitable trades, you need the moving average. The trade is successful but the market have already start to reverse. If this trade was entered just few seconds late, it will be a zero profit trade. This is a put option trade entry point. The market is falling, but the strength is not the best since it is already getting above the moving average and the red candles have not been reaching the lower Keltner channel line. At such entry point, you need to enter trades when the green candles are above or at the upper Keltner channel line, and blue stochastic oscillator line have crossed the yellow line from overbought conditions going downward. You don't want to enter late trades at that entry point, because you can end up losing the trade. When the lower Keltner channel line is moving upward indicating the market is growing upward, placing put trades become disadvantageous. When trading, it is not advisable to place trades when the Keltner channel upper and lower lines are converging towards each other, because it usually results in the market moving in one direction. Let's see how the trade will end up. It's another successful trade, the strategy is good. Let's enter a put option trade here. To identify when it's a good time to place trades at the market in this currency pairs is a bit tricky. The Keltner channel line are converging, which makes the trade entry point not a good one, but in the market sometimes, this type of trade entry points turn out to be good, but not all the time. By practicing trading with this strategy, you can easily sort out good entry points and the types to avoid placing trades on. When the Keltner channel indicator lower lines start moving upward, the stochastic oscillator can still identify the put option trade entry point, but to know the strength at which the bears will take the market down at is all depending on the moving average. When using a strategy with stochastic oscillator, you need to take into consideration the angle at which the blue line crossed the yellow line at. When the blue line crossed the yellow line but it is moving close to the yellow line, it's not a good moment to enter a trade. The entry point is turning out to be a good one, but if the moving average was not going downward, the trade may have not been successful. Another win. Let's place a call option trade here. The conditions for this trade is different from the other call option trades we have placed already. When the exponential moving average is falling downward, any call option trade is with a disadvantage. On the screen you can see that the moving average is falling with much higher strength, but because the stochastic oscillator blue line have crossed the yellow line from below growing upward, it is an entry point. Take note that, I place trades on some of these entry points just to explain why you should not place trades on such entry points. When the markets start growing upward and a red candle opens when you have not yet placed a trade, you should consider not placing the trade because in most cases the market reverses at that point. An example is the trade in the screen now. When the Keltner channel indicators start to converge and the market is generally falling, it's not good moments to place either call or put option trades. Few seconds to the end of trade, and it's all profitable. This entry point is at the middle of the Keltner channel indicator, but the stochastic oscillator is already in overbought conditions and the blue line have crossed the yellow line moving downward. You need to take note that the exponential moving average at that point is neutral and the Keltner channel lower line is moving upward. At such point, although the stochastic oscillator is in overbought conditions going downward, it is still hard to determine the right entry point. When the exponential moving average is neutral, it's not easy to identify the good trade entry points since the market can turn out to be falling or rising at any moment in time. When your trade expiry time is 2 minutes or 3 minutes, you really need to consider following the necessary conditions before placing trades. If not, you may end up losing trades at last minutes. The trade is going perfectly well in our favor, so let's hope it ends successful. Great, the trade is successful and now we are going for another trade. Here is another entry point, and it's a good one, so we are placing one call option trade here. The exponential moving average is falling, but the stochastic oscillator is already in oversold condition, and the blue line have crossed the yellow line growing upward. The red candles are below the lower Keltner channel line, and the trend is reversing. It's a good moment to place trades, but when placing call trades with the moving average going downward, make sure to enter the trade as soon as the necessary conditions are true. When the stochastic oscillator lines cross growing upward or falling downward, you need to allow it to cross the oversold line if from below or the overbought line if it's from above. This way, you can easily know is the market continuing to go in overbought or oversold conditions, or reversing to make a good entry point. The trade is going successful, and that's great. Understanding some of the few things about placing trades with this strategy is good, so you can increase your profitable trades. It's another win. I'm entering a trade at this entry point, although it's not a good entry point. The exponential moving average indicator is falling, but the strength is weak, and the red candles are below the lower Keltner channel indicator, and the trend have started reversing, so it's a call option trade entry point, but not a good one, because to win a trade at that entry point you need to enter the trade before all necessary conditions are true. Entering a trade at such entry point, I took into consideration the two red bearish candles, because the bulls will need to react to that bearish movements. Understanding candlestick patterns is important for every trader. Sometimes in the market, even with all necessary conditions being true, you can still lose a trade if you don't understand candlestick patterns. The trade is promising, and that's good. We have been placing trades just to explain entry points, but after this trade, we will be going for the real entry points that are highly profitable. You don't want to miss out such entry points. Also look at the time I'm trading on at the top left of the screen. Great winning so far. Let's get to the real trading now. This an entry point, and it's a perfect one, and we are going in with more trades. The market was not really good at the beginning of this trading session, but now that it's getting good volatility and stability, we are going to make some pretty good trades before the end of the session. When the stochastic oscillator goes below the oversold line, and the blue line cross the yellow line, and it's growing upward without any delays at the oversold conditions, it generally indicates a good volatility. The red candles reached at the lower Keltner channel line, and the trends start reversing without any delays, and those are really good moments to catch when trading in the market. The exponential moving average is indicating the market direction is falling, but the strength is weak, so it's not a problem for our trade, since it's just 2 minutes trade expiry time. The entry point was really a good one, and it's giving great results. The trades are all successful. Great. Let's place 4 put option trades at this entry point. At this entry point, the necessary conditions are true, but the deviation of the Keltner channel indicator is not good at all. When the Keltner channel indicator upper and lower line turn to converge towards the middle line, it's not generally a good moment to place trades, even when the necessary conditions are true. Apart from the Keltner channel indicator having low deviation, the stochastic oscillator is in overbought conditions, and the blue line is crossing the yellow line falling downward, and the trend is reversing, which is a put option trade entry point condition. The exponential moving average indicator is moving downward, signaling the downward movement of the market. The strength is good, that's why even with the low deviation at the Keltner channels, the trades are somehow still in our favor. Let's see how the trades will turn out to be. Hopefully, it should end in our favor. Great. We won at the last seconds. Here is an entry point for put option trades, and we are going for 3 put option trades. The entry point is good, although the Keltner channel's lower line and the exponential moving average is going upward. The stochastic oscillator is still to cross the overbought line, but it's still an entry point for put trades. When the moving average is going upward, the put trades are to be entered as soon as the necessary conditions are true. And the case with the trade in the screen is no different. The number one rule that you should always follow as a trader is discipline. If you are not disciplined and following the necessary conditions for placing either call or put option trades, you will always be missing out many entry points, or winning many trades and ending up losing back everything. Following one strategy that works well for you is another rule. You can learn many strategies, but you need to master only one, which is the one that gives you the most profitable trades. The trades are all successful, and those were the last trades. Thank you all for watching till the end. I really appreciate it. If you are new to the channel, subscribe and turn on the notifications and you will not miss out the new strategies, trading tutorials, and how to make money online. Stay safe everyone, and see you on the next one.